Morning. Needham's Rajvindra Gill joins us this morning. Talk about some of the numbers. Raj, I guess, a lot of discussion about mining, specialized mining especially, and sort of stripping that out, the $400 million number. What was most interesting to you in the print?
Well, I think a number of things. The gaming revenue more than doubled year over year. At the same time, data center revenue grew 90%. And the cryptocurrency was pretty much just icing on the cake. And so the core business is growing, 60, 70%. And this is a company that is on track to do about $27 billion in revenue next year. That's going to equate to almost $16 to $17 of earnings next year. So just phenomenal growth on the data center side, a massive upgrade cycle underway on the gaming side with their new Ampere architecture, with their GeForce 3000 series. A significant amount of upgrade cycles is happening in gaming. So it was an extremely strong print across the board.
Raj, how much do we have to wonder if this is as good as it gets for this market? I mean, we've got crypto happening, data center, pretty good still. And then you've got this PC graphics and gaming market that's just been booming in part coming out of the pandemic. Does all of that have to stay good for Nvidia to continue to look this good?
Yeah, I don't think they're kind of interrelated, and I think some of those issues are conflated. Some of them are transient, temporary issues. I think you have to distinguish between those versus secular kind of growth drivers that are happening in the industry. So let's talk about gaming first. There's about 200 million GeForce gamers around the world. That's Nvidia's installed base. Only 20% of that installed base is on the latest architecture, the latest gaming architecture, which is the Ampere architecture and the GeForce 30X series. So there's a massive upgrade cycle that's going to happen over the next 2 to 3 years. And the reason why that upgrade cycle is going to happen is that the capabilities of these games include things like ray tracing, which is basically rendering cinematic lighting for the game. So you have highly photorealistic games that are all going to be pretty much based on ray tracing. So you see a massive upgrade cycle to these graphic cards, and that is just going to continue. And then you have obviously the secular shift in gaming in general in terms of esports. On the data center side, Nvidia is pretty much leading in terms of the deployment of artificial intelligence. And if you look at the deployment of artificial intelligence, it's happening across the board. So 50%, more than 50% of their data center revenue is coming from verticals. These are industries, whether it's financial services, retail, transportation, logistics. They're all deploying some form of AI inside their companies. Then you have hyperscalers, which are Google, Amazon, Facebook, deploying AI for their own internal applications like Google Cloud, but also for external as well. And Nvidia is the leader in terms of AI. And so those type of trends with respect to artificial intelligence are not going to slow down. They're just going to continue.
Right. So, Raji, what you're saying is that it's likely to get even better, at least in terms of gaming and data center businesses. But what about crypto? I know it's still relatively small, but is there a risk that it could not meet expectations or slow down, especially given these rising ESG concerns?
I think Nvidia has a kind of a two-pronged strategy to try to get a handle on the cryptocurrency risk. So number one, they have developed their own cryptocurrency mining processor chip. It's called the CMP. So it's a specified, customized processor primarily for miners. Secondly, for graphic chips, new graphic chips that they are going to be releasing in late May, they've reduced the hash rate for Ethereum in order to slow down the mining performance, in order basically to kind of shift the miners from the graphic cards that are used for gamers over to the specialized CMP processor. So they are taking steps in order to, number one, distinguish between gaming graphic cards and cryptocurrency mining. Now, if you look at the revenue that they generated from CMP or the crypto mining processors, it was about $400 million of revenue. That's about 6% of total sales. Last quarter, it was about 3% of sales. So it doubled, and we're seeing a lot of growth, but it's still relatively small as a percentage of the overall sales. So the bottom line is that the company is taking steps to try to provide more transparency, to bifurcate their supply and their demand for gamers, which is the real true customer base versus miners.